This is Free to Exchange, the show where free markets and free-thinking scholars meet. I'm your host, Ben Powell. Today we're going to take a look around the world at countries with different levels of economic freedom and different trajectories of where they've been headed recently. On the first half of the show, we'll look at some recent reformers, Vietnam and Serbia, and discuss how their reforms and improvements in economic freedom more generally impact investment opportunities. Then, on the second half of the show, we'll discuss Japan, its long stagnation, and what can be learned from their experience. My first guest is Dr. Marshall Stalker. Dr. Stalker is a portfolio manager, vice president, and global macro equity strategist at Eaton Vance. He's also the author of Don't Stand Under a Tree When It Rains, that's about his experience making direct investments in Egypt during the Arab Spring revolutions. Marshall, welcome to the show.
Oh, good afternoon, Ben. It's good to see you. I think last time we spoke, it was in Moscow at the Hotel Metropole, contemplating Russian economic history.
It was. So let's branch from there. What were you doing in Russia then, actually, Marshall? Well, what do you do?
It's what I do most days in my life, is I try and get a better idea of where economic policy and economic freedom is heading in a country. So we were there in Russia to see if there were perhaps still some free market liberals that might have an opportunity to influence Vladimir Putin and the direction of economic policy in that country.
All this time I thought you were just meeting me there for a cocktail. So why do you, in working as a portfolio manager then, look for opportunities like this of economic liberalization?
Well, what we know is that economic policy can have a pretty grand impact on the investment outcome. I mean, really simple economic policies like nationalization of industries, which is the theft of a private property by the government, can wipe out your investment returns. But we also see the exact opposite in some countries. Countries that cut or eliminate the corporate income tax, which causes companies to have more money to reinvest and grow their operations, something we've just seen in the Republic of Georgia.
So, okay, the Republic of Georgia is one example. What's actually your favorite example going on in the world right now like this?
Well, my favorite example is probably the free market communist state of Vietnam, an oxymoron in and of itself. Vietnam in 1986 started under the Doi Moi policy of liberalization. They realized that central planning didn't work, and so they began to open up to private ownership of industries. Even more recently, they've removed foreign ownership limits on companies, meaning it used to be that foreigners could own no more than 49% of any company in Vietnam. That's now 100%. So you have foreigners rushing in to buy assets, and that's pushing up the value and productivity of these assets as foreigners bring their experience in running businesses. So you have a removal of foreign ownership restrictions. The government is also privatizing a number of the industries that the formerly communist government was owning. They just privatized the Saigon Beer Company, for example. So we see the size of government shrinking.
So tell me a little bit about the privatizations that are going on there. How is this happening? Because I remember back, so that Vietnam's a kind of more modern example of doing this, but go back to the end of the Soviet Union and the crony capital, I don't even know if it's capital, the crony acts between the government and privatization there. Is it working better in Vietnam?
It is indeed working better. They're basically selling these assets to the highest bidder. So you come in and it's very transparent. The government then collects that money from selling the asset and uses it ideally for common good projects like public infrastructure, which is much underdeveloped in the country.
What do you think the biggest areas of reform left to do that would encourage more investment in Vietnam?
Well, one of the things we see is that the Vietnam government and a number of other countries are signing on to a free trade agreement, the one that our country just dropped out of, the Trans-Pacific Trade Partnership. And those countries in Asia are going to have lower trade tariff barriers and more efficient business as a result of that. So we're seeing increased trade liberalization as an important component moving forward. We're also seeing that the government needs to continue to shrink the size and scope of the government spending deficit. And they've held themselves to kind of a firm debt to GDP cap, and there's still a little bit of work to do there.
And how about their monetary system then? Is that stable if their debt to GDP cap is still a little sketchy?
Well, it's always an area of concern. It's been stable because so many foreigners are rushing into the country right now to set up factories and invest in publicly traded stocks. So there's a lot of foreign currency coming in and creating demand for the Vietnamese dong. So it's been very stable versus the US dollar. With that said, every country goes through an investment cycle and there will be pressure on the dong at some point in the future. But for the time being, the currency's held up well, while the State Bank of Vietnam, the centrally planned bank there, has improved the quality of its operations.
Now, let me ask you something that kind of broadens out a little bit more generally from Vietnam, because you said it was your favorite capitalist, communist country. And you were speaking about its economic system being largely capitalist, but it's still the Communist Party that has a monopoly in politics. And this sounds similar to what's happened in China. What's the relationship in terms of your investment strategy with regard to this of political freedoms versus economic freedoms?
Right. Well, what we see in the empirical literature, I publish empirical literature in a number of journals, is that the political and civil freedoms really have no determinant role in investment outcome. It's really just about economic policy, business regulation, trade policy, the rule of law. So the fact that we have a single party system in countries like Singapore or Vietnam doesn't really seem to have an impact on the outcome. What the impact is when a country liberalizes its economic system, moving towards free markets where you see such a successful investment outcome and gains, frankly, in productivity and per capita income. So I'm not too concerned about a single party communist state in Vietnam. That will come to an end at some point. Let me add one more thing, Ben, is in some of the work we're doing, we're trying to better understand how these economic policies change in countries, why some countries increase their economic freedom. And one of the things we have found is in low freedom countries, it does appear that democracies actually help facilitate liberalizations. And I'm guessing that's because when you can vote, you're all in this together when economic policy changes, rather than having an autocrat tell you exactly what to do. So that brings some level of skepticism, as I think you should, to China and Vietnam. But nonetheless, we're very encouraged by the liberalizations we see in Vietnam and also to some extent China.
Well, economists like Milton Friedman and Friedrich Hayek, I mean, long ago talked about the relationship between political and economic freedoms, and that it's hard to have a lot of political freedom without economic freedom first. Do you find kind of liberalization in economics leading the way to politics as well?
Well, you know, I mean, you're asking an empirical question, and I don't have the empirical answer in front of me. My kind of anecdotal experience is it's a rather complicated and unclear answer. We have kind of hyper-democracies like India, where I'd suggest the democracy is actually a bit of a stumbling block to liberalizations because so many different constituencies, no one can really agree to get things done. Whereas you can have single-party systems, like I said, Vietnam, where you do get liberalizations done, they just have to realize what the correct economic system is, and there's no kind of competing ideas when you have a single-party system. So it's a bit more complicated.
Okay. Let's bring it back to then the investment returns with regard to changes in the economic policies, the economic freedoms. In the case of Serbia, a place that not very long ago was very messed up, but you're bullish on Serbian investments.
Yes, we love Serbia. This is a country the United States dropped a bomb on not too long ago, back in the 90s, and boy have they made an about face. The government was way too large, they borrowed way too much money, and so they had to figure out how to shrink the government. Firing government employees is not fun and not popular. They came up.
I'd kind of like to do it.
It might be popular with you and me, but it doesn't get you reelected. So what they did is they came up with a very interesting way, which is basically a solidarity tax on government employees. All government employees had to pay a higher income tax rate, meaning they all took exactly the same pay cut as a percentage of their income. So no one was being favored or hurt, and it was helping the government shrink the size of government expenditures and balance the budget. The result is probably the least productive government employees, now finding that they made 10 or 20% less, went on to private industry. That labor pool then becomes available perhaps for more productive efforts than the some of the more useless bureaucratic policies they had. So that's the first thing, is they really shrunk the government. They, like many other former communist states, owned a lot of production capacity, a lot of businesses. They've been in the process of privatizing it. Even the Belgrade airport was government owned and run up until this past January, and they just privatized it, introducing a French company to come in and run it.
Has their privatization, like Vietnam's, been relatively transparent?
It has been transparent. It's been a little frustratingly slow sometimes, but it has been transparent.
And the effect of the government workers voluntarily leaving their jobs, is all of a sudden regulation collapsed and consumers getting, hurt by this?
No. Actually, I think economic activity has improved because they're no longer dealing with some of this bureaucratic red tape.
All right. Let's, for the last couple minutes then, turn this around from places that you're bullish on to more bearish. What happened after your cocktails with me at the Metropole and the rest of your visit in the Soviet Union? Did you become more bullish on them?
We are a Russian bear, so to speak. The difficult thing with Russia is you do have some market liberals in the country, but transitioning to a proper liberal economy is going to dislocate a number of power bases, including that of Vladimir Putin's. So what I've been unable to identify is a path to leadership for people like Alexei Kudrin, who is in the country, who is a market liberal, who is an advisor to Putin, but he's just on the sidelines at the moment. So we have this difficulty of competing interests between various rent seekers and those seeking market liberalism, and at the moment the rent seekers are winning. One bit of evidence we have there is that the banking system is being nationalized as we speak. The government has taken over several banks under the view that they're failing, promising to sell them. Meanwhile, they already own a very large percentage of the banking system and haven't sold anything that they've owned. So pretty soon, the Russian government is going to be the Russian banking system at the same time. So we don't see privatizations in Russia. We don't see the government shrinking at all. We just don't see economic liberalization happening. That's not to say there won't be investment opportunities when the price of oil doubles in an oil exporter like Russia. But when it comes to fundamental improvements in economic productivity, it's not going to happen in Russia.
So ironically, in Russia and the Soviet Union, where they threw out the communist, there's less economic liberalization than in China or Vietnam, where the communist government is still there.
It's ironic, but in many ways I think it's reasonably rational. I think what a lot of these communist leaderships realize is that if they don't create some economic gains for their citizens, they will be unceremoniously dismissed. It happened when I was living in Egypt under a reasonably socialist government. They were dismissed because their economic liberalizations weren't reaching everyone. So I think folks like Xi Jinping in China realize they have to create economic gains so that they have credibility to stay in power. And so that's what these Chinese communists seem to be doing, same in Vietnam.
Well, thank you for this discussion today, Marshall. We learned a lot.
Absolutely. You're quite welcome. I look forward to our drinks in Moscow.
All right. Up next, how did Japan's policymakers and central bankers turn its economic miracle into decades of stagnation and poor growth? And what can the U.S. policymakers learn from Japan's experience? We'll be right back.
This program is made possible in part by a grant from the Helen Jones Foundation, supporting education and the fine arts in keeping with the philosophy of Helen DeVitt Jones, who devoted her later life to sharing her wealth as a patron of philanthropic causes. The Helen Jones Foundation. Free to Exchange is a joint project of Texas Tech's Free Market Institute and Texas Tech Public Media. More information is available at fmi.ttu.edu.
Welcome back. Joining me now is Dr. Gerald O'Driscoll. Dr. O'Driscoll is a senior fellow at the Cato Institute. Previously, he's been the vice president of the Federal Reserve Bank of Dallas and has taught economics at UC Santa Barbara, Iowa State, and New York University. He's published widely on international monetary and financial issues, as well as other topics. Jerry, welcome to Free to Exchange.
I'm happy to be here, Ben.
So today, let's talk about the kind of rise and then fall of Japan and what lessons it has for us in the United States. Because a lot of people today don't think of, even though it's one of the largest economies in the world, they don't think of Japan as the powerhouse the way people used to. Today, everyone's afraid of, for better or worse, China. And no one's talking about Japan, but it wasn't like that 30 years ago, was
No,
it?
it rose out of the ashes of World War II, phoenix-like, started to grow rapidly. At first, it produced cheap goods that gave Japan a bad brand name, but then it started...
Kind of like China now.
Kind of like China now. And then it began producing better and better things. It started bringing cars over here that gave U.S. automakers a run for their money. And it was an economic powerhouse. It was the rising sun. It was Japan Inc. And that referred to the alliance between the government and the politicians and the bureaucrats to advance the interests of Japanese companies in the global economy. One might say it was a model to put Japan first. It had everybody scared.
Yeah, I mean, if we were looking at business schools around the country in the 1980s, this is the model they would have been talking about, right?
Yep. And there's a 1993 movie, The Rising Sun, that's about this, and everybody was scared. Now, what happened is, beginning around 1985, there started to be this incredible asset boom in the Japanese economy, and you had both a land asset bubble and an equity asset bubble. And that broke in 1991, and now the narrative changed.
Right, and at that point, I remember the land prices were something astronomical, where it was, things like, whole Manhattan blocks were reduced to a couple square feet in Tokyo in terms of equivalent value.
Equivalent value, yes. And so they thought Manhattan real estate was cheap, and they bought iconic Manhattan buildings.
Right. And then, since that time, not only did their asset bubble pop, but their economic performance never really recovered, did it?
No, it never really recovered. And they engaged in very low interest rate policies beginning in the 90s, and they engaged in massive government debt finance spending.
So let's dial it back really before we even get to how they tried to fix this problem. The asset bubble just didn't pop up, did it? How did we get an asset bubble in the first place?
Well, it started with fundamentals because of this fantastic economic story.
Right.
But the way the banking system is structured in Japan, it had used a lot of land as collateral, and then it wrote up the value of its assets on its balance sheet. So as this credit cycle fed higher prices for both land and equity shares, this enabled the banks to lend more. It became a self-fulfilling prophecy. Those never last, but they went from fundamentals to inflated asset bubbles in these two areas, fueled by bank credit.
Yeah, I was going to ask, what is the Bank of Japan then doing during this time in the late 80s?
The Bank of Japan is just letting it happen.
They're accommodating with
monetary policy. Now remember, back then the Bank of Japan was an arm of the Ministry of Finance, and this all seemed good to the politicians at the time.
So what's the turning point then? Why did their bubble pop?
Well, the timing of popping of bubbles is always difficult, but eventually somebody said this can't go on, and the bank lending began to cut back, and all you have to have is a slowing, and then these bubbles pop. There's no formula for the magic moment when a bubble pops.
Right, otherwise we'd all be rich.
Oh, we'd all be rich, yeah. You tell me the magic moment, I'm going to get out of the stock market the day before.
Me too. But in this case, then, the magic moment kind of came not by an abrupt contraction of the money, but just the bank stopped expanding as much.
As much. They began to become constrained.
So it pops, and this is
around 91.
91. What do they do after this?
Well, the Bank of Japan does respond to that, to the collapse in asset prices, and it does begin, not immediately, but it eventually begins cutting interest rates to very low level. And the government steps up its spending, so you have expansionary fiscal policy and expansionary monetary policy. And everyone said, why didn't Japan recover? Remember, this is 1991, and they have not yet recovered.
This is, particularly, if we even hone in right on that decade of the 1990s, it wasn't for lack of effort on either. I mean, the traditional Keynesian stimulus package, right, would be fiscal stimulus, public works,
right,
what was Japan doing with public works and construction and stuff like that?
Spending like mad, at least the government-sponsored part of it. And the Bank of Japan became very accommodative. They put in an early version of what we now call quantitative easing. Ultra low interest rates, easy money, easy central bank money. And the problem is that by itself, that can't cure structural problems. And their structural problems were unsustainable government debt and a really regulated economy.
So how big is their government debt now? Because that's another popular topic here in the United States.
Well, they have a government debt as a percent of GDP that would be impossible in any other country. It's over 200%. The reason is twofold.
The government owes more money than twice the annual output of the economy.
Yes. The reason it still works in Japan is, first of all, it's almost all domestically owned. There's no problem of international creditors to speak of. And secondly, they have this huge postal savings system, which holds a lot of the government debt, and it's like a separate banking system, a little bit like our S&L industry.
Mm-hmm. And in that postal savings system, is the government directing where savings goes structurally in the economy then?
Well, it's mostly to finance government debt.
Okay. So then we exit the 90s. They've kind of given up on the fiscal stimulus because they've got them into so much debt. What have they been left trying to do after that?
Well, with the election of President Abe, he came in and he saw there were three problems. There was a monetary problem, a fiscal problem, and a regulatory problem. And he immediately pressured the Bank of Japan by replacing the then governor with a new one to expand monetary policy even more. In other words, the Bank of Japan had been expansionary, but not sufficiently so in his view, because they still had deflation. And secondly, he promised fiscal reform, but mostly it was more fiscal spending. But the third thing, deregulation, has proved to be very difficult.
Why is it proven so difficult?
Because when you deregulate an economy, you always start by taking something away from people, taking away a privilege, taking away an exclusion in the market to let in more competition. Think of it as, in the United States, you want to deregulate urban transportation, so you let in Uber. Oh, no, now you're hurting the taxi cab monopoly.
Right. So the story of Japan, after you get through that initial collapse and lost decade of the 90s, it hasn't been collapse. It just hasn't been recovering really.
It's been stagnating.
It's stagnating.
Stagnating.
You know, everything you've said sounds eerily familiar here in the United States, post-2000 through after Great Recession. What's in common?
Well, what's in common especially is the monetary policy. Colleague and Tom Cargill and I have written a paper on the Federal Reserve in the shadow of the Bank of Japan. Very low interest rates, very expansionary monetary policy, expansionary by look at the balance sheet of the central bank, the Fed, exactly mimicked what the Bank of Japan tried to do for beginning in the 90s.
We kind of had bubbles in two markets too, just not simultaneously.
First we had the high-tech bubble, and then we had the real estate bubble. Yeah, the high-tech bubble didn't turn out to be very deleterious because it was all equity financed. But when you have a land bubble that's financed by debt, and you have a lot of leveraging and you have to deleverage, there's where all the pain and suffering comes in.
In what built up to the 2006, 7, 8
right.
turnaround with housing, of course.
Right.
So if we have this kind of commonality of easy monetary policy and bubble, what's the commonality on the flip side of how the U.S. government dealt with this compared to Japan?
Well, the commonality is we also engaged in very expansionary fiscal policy, which has put us at risk for some kind of long-term fiscal crisis, and we didn't deregulate the economy. In fact, under President Obama at the federal level, and it was also going on at the state level, there's been a lot of re-regulation. Now, just to make this very current, what Trump is trying to do is, at least on the regulatory side, unravel it.
And we've seen a little bit better growth finally the last year.
I think the growth up till now has mainly been due to the deregulation. He really is doing a lot of it. He really has instituted a regulatory rule by which every new regulation has to be paid for by 2 deregulations.
So let's roll back a couple administrations actually for this narrative too to think about, because when I think back to Great Depression, a lot of people talk about it. It was laissez-faire Hoover, and then the New Deal came in with FDR. Well, we had Bush before Obama. the recession policies weren't all Obama. Was Bush doing something different than Obama, or are they, two peas in a pod?
Well, I would say that Bush was a piker compared to Obama, but really the Bush policies set the stage for the Obama policies. Bush had the bank bailout. Also, Hoover was not a laissez-faire president, and he put in a lot of spending after the beginning of the Great Depression, and the FDR administration acknowledged that basically he put them on the path for the New Deal.
Yeah, I agree completely that it's a Hoover myth, but I just wanted to take a look at this with Bush.
But Bush was no laissez-faire president. Here's how I compare Bush and Obama. Bush talked a pro-business line, but put in a lot of business regulations. Obama talked an anti-business line and put in a lot of business regulations.
All right, so in our last just few seconds here then of coming out of this, if we look at Japan and want to take a lesson away for the United States and other countries, what should we be doing different, most important?
We've got to put our fiscal house in order at some point, and we have to have a lot of deregulation in the economy.
I think so too. Thank you for joining me today. I appreciate it.
Happy to be on.
We talk a lot about economic freedom on episodes of these shows, but rarely does it actually translate into investment advice. Today's show was a little bit different. We learned how stock market returns are associated with improvements in economic freedom and looked at some surprising places around the world, Vietnam and Serbia, that are liberalizing, and others like Moscow that aren't, and how this impacts investment opportunity there. Then on the second half of the show, we heard about how a capitalist country, Japan, turned its economic crisis in the early 90s into decades of stagnation and recession, and unfortunately how US in our recent crisis followed a lot of the same policies. Thankfully, it seems we've eased off of those in the United States and did them to a smaller scale than Japan anyway, and we seem to be turning the corner. It was a great episode. Thanks for watching. We'll see you next time.